Hey, how's it going, everyone? Hareli here. Welcome back to the channel. Today, we're going to talk about one of my trading strategies that I like to use intraday, um, for day trading, swing as well. Okay. Um, let's start off with this though. When we're introduced to the market, people always tell us to be profitable, you need to buy low. Okay. uh, let's see, $9.50, and sell high, right? That's the general idea. You buy low and then you sell high. And I wish it was as simple as that, right? But we all know that the market does not move in this fashion, right? It's not linear like this. But that's the general idea that people have, okay? And it's just that simple. But the market more so moves somewhat like this, right? Uh, let's see, kind of like this, okay? Where, let me see, let me delete this. Okay, where it goes up, you bought it at, let's say, $9 or whatever, a stock, and then it goes up at like 23 $24, and it just goes sideways for a little bit, and then it goes down, and then it comes back up, or it goes down, or it goes back up. But we really don't know, okay? So our job as traders, okay, is to find a good area to buy in, where the risk to reward ratio makes sense to us. Okay, so as traders, it's pretty much our job to find, these highs and lows and buy-in areas, or these sell areas. Some people like to call it targets. I don't really have a target. I don't set those anymore. It's a little complicated. I like to keep it simple. But let's talk about my trading strategy that I still use, even in day trading, intraday, and swing. Okay, it's called wave theory, and in wave theory, um, there's 5 specific structures, right? There's a wave 1 with the initial trend, and after the trend is done, it'll correct for wave 2. Okay, and the stock will move to the next wave at 3. Okay, and after 3, it'll come down for wave 4 and finish off at wave 5. Okay, let's just say $43. Now, this is the basic structure right here. And you're saying, Hareli, what do I do with this? How can I use this information that you just gave me? Okay, so let's just recap. Wave 1, you come up for initial trend. Wave 2, sharp and corrective. Usually, it'll sell off quickly. Just like, well, wave 2 compared to wave 4 is they have pretty different characteristics, yeah. But these points will we'll find these points, and I'll show you guys how to find these value areas, right? So we can take advantage of these impulses. Like, if you miss the initial trend at wave 1, where can I buy in for wave 2 so that I can prepare for the next run up? And if I miss 3, where can I prepare, or get ready to buy in to for the next impulse move at 5? Okay, so let's break this down. Okay, so let's say wave 1 happened, okay, and you missed it. Now you're thinking, where should it go? Should I buy in now, in hopes that it'll go up? but it could also go down. We don't know the future, right? But what is a good range, or they call it R&R, risk to reward, right? Ratio, where I'm buying at wholesale instead of market, right? Instead of retail. So you plot your wave one, right? Let's say wave one happened, and go ahead and take your fib retracement tool. So you plot the bottom of one to the top of one. Okay, and I'm gonna start talking about the rules here. So wave one, after the trend happens, wave two usually corrects at around 61%, around that range. So 50 to 61%. Okay, so expect to buy in, at around this range for a pretty good risk to reward, right? We don't, like I said, we don't want to buy at retail. We want to buy at a discount. Okay, so if you're stocking a stock, you can start a position here at around maybe $10. Okay. Now, for the next projection, right? Okay, so I bought in here. Where can I expect the stock to go now? So you take your extension tool, you plot the bottom of one to the top, and then to where two landed. And wave three will usually go all the way up to 161%, right? So from 2 to 3, that move is going to be 161 or 1.618. And you hear people talk about that a lot. So your target, or if you do targets anyway, should be around $23, $24. Okay. And, we don't want to take the exact bottom or exact tops. We just want to take like little chunks here and there, right? So you're not going to wait all the way to $24. For me, anyway, personally, I don't wait for all the way to $24. I'll just take, little pieces here and there, because we don't want tops or bottoms. We want the middle, and that's how we stay profitable. Okay, so now let's say you missed wave one and wave three, and you're thinking, okay, I missed the initial push from $9 to $24. Now, what is a good risk to reward ratio, or a good zone to buy in? Because it could still keep going. I've seen it go all the way up to 200%, all the way up to 400%. We don't know. We don't know when the exact top is or exact bottom. But like I said again, we don't want to be buying at retail, right? We want to buy at wholesale. So to calculate where wave 4 might land, okay, so you take the bottom of 2, your fib retracement tool, bottom of 2 to where the range of 3, the top of 3, and around there. So maybe $19. So it'll trade between $19 to $13. Okay, so around this range is a pretty good ratio, risk to reward ratio to buy in at. Now, if it breaks under 78.6, then it doesn't respect theory, and we would have to do a recount. Okay, so let's just say, we can buy in at maybe 618 or 0.5, around there, like $18. That's a pretty good range to buy in. Okay, now something to note about wave 4 is that it trades sideways, and I call this the retail trap, right? It's kind of slow. The wave 4 is kind of slow, and I call this a retail trap because fundamentally you'll hear it on the news, right? Wow, GME just shot up 50 points, or Tesla just shot up 100 points, Or Bitcoin just went crazy. It went, I don't know, from 5,000 to 20,000. And people get excited, people run on emotions. And they end up buying the top of three, you know. And that's, like I said, hey, you missed that initial push, just wait. You'll hear me say it over and over again. Just be patient, guys. Take your time. Wait for a good entry. Okay. So one characteristic of 4 is that it trades sideways for a really long time. It'll create patterns like pennants, wedges, flags, channels, of that sort. You heard people say it's bull flagging or whatever. And this is a trap because it's so slow that you listen to all your other buddies say, hey, you should have traded this with me instead of buying that, because now I'm up, whatever, 30 points, I'm up 100 points, and people FOMO in, right? Like, as soon as this breaks even, I'm going to let go of it, And you can see the mental drain that it causes retail traders, because they don't know. Like, most retail traders will guess, right? There's no process to what they do. They'll guess and they hope. And that's one of the biggest mistakes that people do, is that they'll guess their entry and then they hope it goes up. Like, ooh, I wish it'll just move 30 points so that I can make my profit. And, nothing wrong with that. But if you're going to trade for a really long time, you need to have some kind of process to follow. Okay? So let's see. So once wave 4 is pretty much over, we can start plotting for wave 5. Okay, so you take your fib extension tool. So the bottom of 2, the top range of 3, and the bottom range of 4. And there you go. At around $30 is where, according to theory, that's where it'll land. So 5, I call it even. 1 and 5 is usually even. So 1 to 1. So like I said, bottom of 2, top of 3, and around the bottom of 4 is where 5 will land. Let me clear that up right there. So now, make a few notes. Okay, so 1 is the initial trend. Okay. And if you miss the initial trend, you can start calculating for a good entry for wave 2. Wave 2 corrects at a range of around 61%, actually minus 61. Okay, minus 61% of wave 1. And for wave 3, okay, like I said, we just want to take chunks of this. We don't want to wait at the top of wave 3. So wave 3 is approximately 161% of wave 1. Okay, so plus. Okay, and for wave 4, wave 4 will correct at approximately 38 to 70 minus 38% to 72% minus 72%. from wave 3. And this is a trap, like I said, yeah, because you'll hear it on the news, GMC, GME, AMC, all that. Some things to note, that it's slow. It trades sideways for a while. You can even you'll even hear people say it's consolidating or whatever, right? That's what they're talking about. And wave 5 is pretty simple. It's 1-to-1 ratio from 1, wave 1. Let's see, wave 1 is approximately the same as wave 5. Yeah, there you go, that makes sense. Okay, so now this is the basic structure right here, okay? With that being said, you know, let's say you're trading this intraday and you zoom out to the daily, right? Now this whole structure, or let's say that was the daily and then you move out to the weekly. Now this whole structure can be considered a wave 1. And wave 1, you know how to calculate for wave 2. Oops, no, sorry guys, mistake. Hold on. Okay, so now you can calculate for, you missed that entire move, right? Like 1 to 5. Now you can restart your count. Okay, so if I missed that entire structure, I can calculate for the next move, right? So wave 2. Okay, and with that being said, if you're trading that on a weekly, you zoom in, that was a daily, you can assume that intraday you'll have this impulse as well. Wave 1, wave 2, wave 3, wave 4, and wave 5. So if you zoom all the way in to maybe the hourly, 4 hours, 30 minutes, 15 minutes, you know, you'll find these. And when you guys see, you know, I'll post on the lounge like, hey, you know, we're starting to bounce at around 60%, or we're starting to bounce at around, you know, 30 or 70% or 50 or whatever, you know, that's, you'll know what I'm talking about. Okay, so these are ranges. And obviously, like I said, you know, if it breaks these ranges and if it dips lower, it doesn't respect our theory and we lose count. Okay, so yeah, like I was saying, right, if you miss that entire move, right, on the daily, you see this structure on the daily, now you're on the weekly. Okay, so on the weekly time frame, you're gonna say, okay, what's a good price to buy, because I missed that $30 move from 9. Okay, I'll just wait for 18 bucks or whatnot. Okay, now to translate this, all right, let me go over this. So I'm just going over these right here so you can take notes of it, or just rewind the video or whatever. Okay, now actually let me write this down for you guys. So today we went over wave theory. Okay, so it's 2 simple tools that I use for that is the fib retracement tool and the fib extension tool. It's really pretty simple, and I show you guys how to calculate for the retracement, right? For the buy-in zones, you go from the bottom of whichever wave you're counting, right? So from bottom of one to the top of one, then you get your buy zone. Or from the bottom of two to top of three, and then you'll get your buy zone for four. Okay. And for the projection, you get your extension tools. So from the bottom of one to the top to the bottom of two, and then you'll get three. Okay. Now, how does this translate to my ideas? In my ideas, you always see the gold box, right? Or gold bar. Okay. And I don't show you this entire structure, but I show you like little snippets of the stock, right? And you'll have these horizontal lines to trade for options. Okay. So, let me make this thicker. Okay, so these are the price ranges that we're looking at. Okay, so if we're gonna swing and we're buying shares, you'll see these boxes. I'll lay them out, right? Or I'll put a blue dash for stop loss, because if it breaks under two, obviously, like I said, it doesn't respect theory, and we would have to do a recount. Okay, that's pretty much it, guys. I hope you like the content. So if you have any questions, let me know, you guys. Shoot me a DM. Don't forget to subscribe, and thank you for supporting Horelli Trades. I'll see you all at Open.